Today, I'm joined by Andrew Forson, President of DeFi Technologies and Chief Growth Officer of Valour. Valour has built one of the largest regulated digital asset ETP suites on the entire planet. And these guys are giving investors, traditional investors, access into digital assets with accounts and brokerages that they already use. Can you walk us through Valour and what your focus is in the role that you have?
Sure. Thanks so much for the opportunity. It's a pleasure to be here with you, Ryan. So, Valour is a regulated issuer of regulated exchange traded products. Exchange traded products is the umbrella term for things like ETFs. In Europe, we have ETCs, which are exchange traded certificates. There are also ETNs, exchange traded notes. So this umbrella is referred to as ETPs, exchange traded products. And as you correctly noted, Valour is known for having a world leading suite of 102 digital asset underlying ETPs listed predominantly in Europe. Valour was founded by a friend of mine, Johan Wattenstrom, who's a brilliant individual. And I think I like to highlight Johan's name because he actually created the world's first Bitcoin exchange traded product back in May of 2015. So Johan is the OG of OGs. And what he did, he and his colleague Olivier Rossi Newton started DeFi Technologies and Valour in order to create a platform for the provision of regulated digital assets in ETP format. Now, why is this important? It's important for people who are Web3 native to not get concerned because it's actually accretive. What it does is it means that regular investors can buy into the digital asset space without dealing with some of the technological hurdles that might impede them from getting involved. The second thing that it does is it means we have access to a great deal more capital. Traditional stock exchanges far eclipse the markets for digital assets. So when Valour wraps a bundle of digital assets into an exchange traded product, it gives access to a whole different demographic of investor and completely new pools of capital to onboard into the Web3 or the digital asset space. The other benefit of this is for things like trusts and estate planning. The laws and technology of buying digital assets the same way that you would buy a Microsoft or an Apple or an Nvidia share means you can better manage the transfer of your digital asset portfolio to future generations through trust, estate planning, wills, and the sort when you buy a product like a Valour ETP.
So I think it's super interesting because we're certainly kind of watching. I mean, I'm sure you find it fascinating to kind of have a front row seat being here in the ecosystem for so long. I think over the past 12 to 18 months, we've seen so much real world adoption. But I would love from your standpoint, where does the digital asset market stand right now from where you sit? So kind of having that full context of when you started here compared to where we're at now, where do you think we're at in the this kind of
Well,
space?
I still think we're at the beginning. I think that I understand there's been a lot of market volatility and everybody, hodl when moon. Obviously, everybody wants increased asset prices. But I think the thing that is most interesting about the ecosystem within which we reside is that, 7 years ago, people were plainly saying, oh man, this stuff has no use. Now nobody's even debating the idea of whether it has utility or not. That argument's been won. I mean, the killer app of the internet could be said to be email. It's amazing the staying power email has had. But then let's look at the killer app of the Web3 blockchain space, stablecoins, right? The adoption of stablecoins the idea of putting money into a completely different technological infrastructure and being comfortable with it, that can only happen because of blockchain. The transparency, the immutability, the speed that blockchain offers enables this to happen. And I think we are clearly just in the beginning phases of this. Now we're starting to see adoption of tokenized securities, equities, bonds, commodities after tokenizing money. So what's going to happen here is it's going to allow massive swaths of the world's population to start to invest. I mean, I'm in Switzerland, so we have a wonderful technological infrastructure. I'm from Canada, wonderful technological infrastructure, just like the US. But we have to remember between North America and the US, you may have access to 900 million people, but there's 8 billion people in the world. And of those 8 billion people, there's probably a solid 6.5 billion that don't have access to investable assets through traditional bank accounts and through traditional brokerages. So when you look at the potential for the utilization of blockchain in penetrating these markets, you see that we're at the infancy of an entire investment movement.
Yeah, I'm one of the kind of weird people that I'll do deep dives into like random documents, and it's really interesting because I know even in the UK and the Eurozone is making like strides very, very quickly. We could probably have an entire discussion about that. But I think what you're talking about is democratization of access into pretty much, it's not going to matter if somebody's a multimillionaire or if somebody has $50 in their bank account eventually, and obviously compliantly. That, and you mentioned how early we are from the digital asset space and blockchain and distributed ledger, but we could say that same thing. You guys are very, very early in the opportunity for, as all of this stuff comes on chain, to be able to offer up opportunities to whoever wants to participate in them. I think that's got to be really exciting. So like a mixture of digital assets, real world assets, you mentioned stocks and equities, like how do you even prepare for what you know is inevitably coming, which is kind of everything everything kind of tokenized, and democratization of access for the 7 or 8 billion people out there?
Yeah, I think that's a very astute observation. As far as preparation from a company, we focus on having a vertically integrated stack. So it means we understand that there's going to be a lot more digital assets, whether they're RWA, which is real world assets represented in digital form on chain, whether it's stable coins or whether it's further L1s, L2, L3 fundamental chain tokens. They all need custody solutions. And we realize that if we're able to, for instance, host or create our own custody solution, then we can be prepared for the breadth of products that are coming out. So this is one of the innovations that we're working on. Another key innovation that we have within our portfolio of DeFi technologies is we own a prime brokerage over-the-counter company called Stillman Digital. So Stillman Digital is an institutional business-facing entity that focuses on helping them execute large block trades. Because more and more, we're seeing large institutions are trying to gain exposure in the digital asset space, but they want to do it in a quick way, a secure way, and a way that they're going to understand. And what's interesting, I see you pulled up Stillman Digital there. They've done well over 60 billion transactions. The counter on the website can't keep up. So this is something that is of interest. And then I would say the last area where we're allocating a lot of energy and focus is within Valour itself. We are expanding our fund operations to create more institutional ready instruments that will be able to bring more capital into the digital assets ecosystem. So that's not just into crypto, but potentially into companies that help to accelerate onboarding into the digital asset space. The last innovation that we have launched and is taking off is in January, we created an index of the price and capital inflow movements associated with our regulated digital asset ecosystem. So on the DeFi.tech website, there's a section called Indices, and this provides probably the first broad-based index of the digital asset industry, so the underlying crypto products, but it also includes the impact of capital flows, which is quite critical because we don't just want to assess things on the basis of price alone. We also want to have an understanding of where investment dollars are actually entering whenever you have an efficient market. And because we have such a broad portfolio of digital asset underlying instruments. And all of these instruments are regulated. The fees are transparent. And our largest market are in the Scandinavian countries and in Europe. It means that whenever somebody is investing in a Valour product, they're not really subject to the vagaries or the intricacies of a crypto platform, which can have different spreads, different onboarding procedures. They can access our products through any broker dealer, and we have our own market making desk internally. So we try to keep our spreads between 10 and 20 basis points, 10 to 15 basis points, so that whenever somebody's interested in buying, they actually are getting the price that is quoted. Our index takes all of this into account in such a way that we're able to produce real signal from the information that we have. So these are some innovations, and these are the ways that we take these, I'll call them big baby steps to increase adoption, familiarity, and comfort in the institutional and retail investor segment.
I think it's super interesting because, it seems like obviously the institutions and enterprises aren't tokenizing things for the sake of tokenizing. They're trying to find real value, and that snowball is just starting to roll downhill. But as they do that, they're figuring out ways that users want to interact with these assets. Like, as you mentioned, I think what blockchain and distributed ledger does really well is, like, obviously transparency, auditability, all of those things. The 99 or the 7 billion people, 6 billion people that aren't here yet aren't going to just become these like super techie crypto users. They're going to be like normal people that want to just go on and see a screen that they can see, all of their stuff. So I'm interested from your standpoint. Have you seen demand shift across the Eurozone over the past few years compared to where it's at now? How has some of the adoption in the Eurozone maybe affected or cascaded into how enterprise institutions and participants are looking at blockchain and distributed ledger right now?
Yeah, I think very astute observation. I would say both in the Eurozone and Brazil, where let's say even 3 years ago, institutions would just say, no, sorry, we don't do blockchain and we don't touch tokens. Now, every institution, whether it's a bank or a corporate treasury, is trying to find a way to do it, to have access and to leverage the technology. Like every single one is building it into the roadmap if they haven't already started the implementation. Now, they don't necessarily know fully how to monetize it or how to take advantage of it, but the acknowledgement that this is the future or is going to be part of all of our futures, that argument is not an argument you have to make anymore, right? The real argument that is made is it's normally, does the regulatory framework enable what we want to do? But I have not met one executive or board that says no, never. And this is something you used to hear 3 years ago. So right now they say, we would like to, but we're concerned about risk. We're concerned about regulation. We're doing a study. We're participating in a sandbox. That's a really good sign because this is how the internet grew.
Yeah.
Remember, I often tell people there was a time where people would not accept a document that was sent via email. Like if you had to sign something, they'd say, look, I'll read it online, but you've got to send it via fax. Now, I've actually had many situations where I've been in an office and I've said, well, as long as I'm here, I'm happy to sign with wet ink. And they're like, nah, it's better if you do it via DocuSign.
Sure.
Right? So in this same way, I think what is going to happen, because the challenge with blockchain or distributed ledgers, which is what Hedera is that it's actually hard to program and it's hard to use in terms of a raw product. But what I see happening is you have institutions like ours, you have a lot of banks, a lot of neobanks, a lot of digital exchange platforms. They're making it so easy so that the possibility of making a mistake is less. And I think with ease, you can get adoption, right?
Yeah.
And then when you have adoption, people become more comfortable with structuring new products that leverage the blockchain. And this ranges everything from on-demand delivery, traceability. And then, of course, you have stable coins. You have all of the suite of financial products and transactions, right? So I think the biggest benefactor is actually the world of finance because they're able to make more products and exchange them more quickly and get them into the hands of more people thanks to blockchain.
Yeah, I think you nailed it. And this, I've seen something very similar. Obviously, everybody knows compliance and regulations. I mean, that's kind of the
It's our favorite thing.
yeah, we know that we need that to happen for actual adoption. But I think you said something really smart. And I've been seeing this a lot recently over the past year, which is risk mitigation, because it's great to have compliance, but we're talking about real world adoption for some of the biggest enterprises and industries on the planet. And they have to worry about risk. Like, so where I think it makes sense, and this is why, you could look at, a lot of different ecosystems do this well, even like in Hedera specifically, is like it makes sense to have familiar relationships at the enterprise and institutional level to be able to walk some of these entities through their adoption paths and try out different things to see what's kind of working and what's not. But on the retail and institutional side, user experience, I think, is such, kind of a big deal about this space. I mentioned earlier, like
Huge.
the 7 billion people on the planet might not be, blockchain coders in the future. Like,
Yeah.
so from your standpoint, how do you guys build out through Valour a user experience that kind of works for anybody that feels like they want to use the platform as you guys move forward?
Yeah, actually, our methodology is pretty simple. Nobody actually has to touch the blockchain, but their money goes into the blockchain ecosystem. What we do is we bridge the world of traditional finance with the world of decentralized finance. So in the back end, we manage custody, we have the trading systems, we have the integrations associated with staking platforms. All of that is pure Web3, pure blockchain, pure infrastructure. But from the client side, they gain access to the securities via an ISIN number, which is the International Securities Identification Number, and they buy through their broker dealer. So for them, they can be assured they don't have to go into a platform and say, am I going into the right exchange? And then they pick the token. Am I picking the right token? And then they have to decide, oh, am I transferring this onto the right network? Because even with stable coins, I've had situations where they say, okay, we want to send you USDC. And then they would say, but which network are you on? So if you're
Yeah.
on Polygon network, then it goes. But if you happen to say, give a wallet that was on the wrong network, then certainly the money wouldn't be lost, but you're not getting it right away. So in this case, because it trades like a traditional security and it's also listed on the major exchanges throughout Europe and Brazil, there's always liquidity. The rules are the same. Any fees are upfront. They're very, very low. Most of our products, our Bitcoin ETH products, are like 0%. The majority of our ETPs have a 1.9% management fee, and that can't change because that's a part of the final terms, which is the document that goes to the regulator that dictates exactly how the instrument will be calculated and ensures investor protection. So, from the investor perspective, they are able to buy and sell these instruments in some countries through their retirement account. They're able to buy and sell them through their bank or their broker dealer. But from the digital assets and crypto infrastructure perspective, that capital, any capital inflows are going directly into the particular token ecosystem. So it's like we're a bridge and we
Yeah.
facilitate the movement of capital between both worlds.
You mentioned NVIDIA earlier, and I always find like a super fascinating stat for me is, and I look at total assets under management here as being about 500 million, but I know for a fact that you guys have been over 1 billion
Yeah.
assets under management.
Yeah,
Um,
that is 6 months ago. Like, at the end of September, we were at 1.2, and the interesting thing is our inflows, net investment into our products has been good, but, obviously, there have been macroeconomic factors. The war hasn't helped digital asset prices. There was a lot of volatility after the October 10th event. They had a big drawdown on one of the exchanges, and that caused asset prices to fall. So I expect there'll be a significant recovery as some of the sessions, some of the events in the Middle East.
so I'm just gonna and I know that obviously I'll preface not financial advice, but I always find this stat interesting. So NVIDIA as a company, you could look at blockchain and digital assets right now kind of as a whole and where it's came from. I always find it super fascinating that right now there's probably like 7 or 8 individual companies that are larger as far as valuation is concerned than the entire digital assets industry. And
Yeah.
yet all of these companies on some level are integrating blockchain, distributed ledger, and digital assets. So it's like that to me, I think is a super kind of interesting, just like tidbit of information for people just to put into context, like where this industry is at right now.
No, you're absolutely correct. And I know those stats well. Certainly now asset prices have fallen. I think the total crypto industry is maybe 2.7 to 3 trillion right now. But last September, their crypto was at a more stable point. The entire digital assets industry was about 4 trillion to 4.1 trillion. The market cap of that, the market cap of Bitcoin alone was about 2.5 trillion. And the market cap of gold at that time, so now gold is higher, but at that time, it was about 25 trillion. So Bitcoin, if Bitcoin had done X, if it had gone from 100,000 to a million, it would be about equal to the market capitalization of gold. And this for me is one of the theses for why there is room for additional value, because we have to remember the value of Bitcoin isn't just because it's blockchain, but it's because it is programmatically assigned in limited quantity. So that means no one person, no one government can basically change the rules the way we see happening with monetary policy, which causes the erosion of the value of our money. But after you look at that, so if you have 4 trillion for the entire crypto space, at that time, NVIDIA was also a little over 4 trillion. Apple and Google are now over 4 trillion. So you have about 3 companies we're all familiar with that all use the digital asset space, but they have a market value of higher than the entire digital asset space, right? But to give a sense of the potential for growth, the market cap of all global equities around 6 months ago was 125 trillion. So what is going to happen whenever you're taking these equities and you're applying them onto the blockchain and people are transacting, consuming gas fees? There is room for growth there. But then an even bigger statistic is a market cap of global debt is 325 trillion. It's 200 trillion more than the total market cap of equities. And we've all heard reports of financial institutions tokenizing debt instrument on chain. So I think that the digital asset space is probably quite significantly undervalued because we're just entering broad adoption institutionally and obviously from a retail side, from the perspective of stable.
Real estate as well. I mean, I know there's a lot of compliance and hurdles to get through, but I mean, real estate as a global industry is somewhere between 300 and 400 trillion, which is like just
Right.
a ridiculous statistic. And you know, we talk about tokenization, that stuff. We're not even really misting the bucket yet, let alone a drop on the bucket.
Absolutely.
You guys have had tons of milestones. I found this. So before we had this interview slated, Valour secures 11 million in institutional investment into Hedera ETPs. You mentioned over 100 listed ETPs. I think over 138 million in net inflows without a single month of outflows. What milestones stick out? And maybe that's stats. I know
Yeah.
you were fact checking that stat. What milestones stick out to you the most within, the past handful of months?
Yeah, I think on the inflows, last year was actually set to, I think it was a little over 100 million net inflows. So after the fourth quarter came in, there was a slight adjustment, but it was still a lot. If it
Sure.
wasn't a record year, it was very close to a record year. Certainly, last year was a record year in terms of our corporate revenues and profitability at 99 million for revenue and 67 for operating. But these are all significant milestones. The investments into the Hedera ETPs, look, anytime you have a sizable commitment into a structured instrument, what interests me from that perspective is a signal it gives to institutional investors that this particular ETP, this particular token, that particular ecosystem is really ready for business. So that means an institution that would like to take a significant position in Hedera in the HBAR. Sometimes institutions don't like dealing with wallet infrastructure, particularly if they're wealth managers, because there's concerns about keys. They don't have the infrastructure set up. So having access to an exchange traded product gives them a traditional broker driven access point that they're comfortable with. But if you look at an instrument and that instrument has tens of millions of dollars of assets under management, you can be far more comfortable taking a 5K position, a 1 million position, than if that instrument does not have a lot of depth, right? So all of these tend to give strong signal to the market.
Awesome. Well, tell us where Valour goes from here. I know, this past year, year and a half, when we talk about kind of where the industry's at right now, it's so crazy that like we talk about the industry and adoption, and we kind of talk about where the market's at. And it's like this has been kind of and I don't know how long you've been in this industry for, but I've been here since like late 2016, and I find it seems like I feel like there's more of a disconnect now than there ever has been as far as what's happening from the adoption standpoint compared to
Yeah.
what we're kind of watching in the market. But what are you looking forward to? I'm not going to go 5 years out because nobody knows in
Yeah, no.
crypto. What are you looking forward to this year from Valour's standpoint?
Yeah, look, I've been in this since I first started coding in like Hyperledger, I think in like 2017. And so that was my first entry point. So I've been here for a while too. And I think it's so funny because if I could have imagined the degree of adoption that we have today back then, you would think the markets would be 10x what they are across all the tokens. And I think what we are seeing strategically from Valour in the short term is actual institutional appetite to get into the space is increasing. So we are deliberately creating structured products, funds, actively managed certificates, instruments to enable larger institutions to get involved. And we do have some unique advantages in that most really big products, like the BlackRock IBIT, based on Bitcoin. And now you sort of get some asset managers are starting to look at Ethereum, or they've created big Ethereum products. What we can do because of our connections with many of the foundations, because of our history of having such a broad based basket of products, is create innovative multi-asset products for institutions that will give them exposure to the longer tail digital assets that have a great story, great use case, great return profiles, but sometimes people don't know about them because the news just talks about the Bitcoin price. So we're going to take advantage of our leading position in the digital asset space with regards to that breadth of products and create more innovative multi-asset products that will be able to be accessed by the larger institutional buyers.
So you bring up an interesting point, and maybe if you could expand a little bit, because I know you're an OG in the Hedera space, but from Valour's standpoint, you guys, not only in Hedera and the Hashgraph Association, the work that you guys have done there, and huge shout out to the Hashgraph Association for helping to put these podcasts together.
For
But
sure.
I see a lot of different big networks and ecosystems kind of even down in this list here from Solana to, I mean, AI has been huge over the past couple of years. I would love to see more people talk about BitTensor. I love I love like seeing stuff about that. I think it's
We do
interesting.
have a BitTensor ETP. We have a
So,
top.
how do you guys? I guess that's a question that I have is like navigating institutional appetite, while also like kind of, I guess like what are some of the maybe in broad strokes, what are the relationships kind of like within some of these ecosystems, like with THA and the Hashgraph Association, or with you know even more broadly?
Yeah. Well, I mean, THA and the Hashgraph Association and the Hashgraph Group, they're my alma mater. I mean, Kamal's a friend. I respect them very, very much. At Hedera, I mean, it's one of my greatest loves in the digital asset space. It's understanding distributed ledgers, understanding the Hashgraph, understanding Hedera. This is something that is innate to me. I built applications on Hedera. And I think it's an absolutely, I think from an enterprise perspective, the concept of the governing council and even being able to demonstrate use cases with that caliber of company, it's second to none. And I think it's probably one of the smartest concepts in Web3 and digital assets. In terms of where the industry and the ecosystems are going and how we navigate working with foundations, well, we've launched a capital market series because I do see a gap between what foundations and the Web3 ecosystems think the world wants to see and what the actual capital markets and institutional investors need to see. So we have launched our capital market series, which is an event series that also takes specialists within the digital asset space and we speak directly to institutional investors. Because on the other side, institutional investors, they see all of these great digital assets, but they don't understand what they do. They don't understand how they contribute or connect all the wonderful innovations they hear about in stable coins or whatnot. So they want to understand, look, we know Bitcoin, but we're hearing about stable coins, but do stable coins run on Bitcoin? Well, of course they don't. They run on projects like Tron, on Polygon, on Ethereum. But if you ask the institutional investors, do they have exposure to Sway, to Solana, to XRP? Sometimes they say, well, no, how can I learn about it? And so our job now is we have these connections with all of these products. We have a wonderful index that really discusses the capital flow movements and generates weekly reports that are made available to investors. So our job is to bring the institutional investors together with the promoters of the technology and the creators of the technology and let the capital markets do their thing. When people know about the technologies, they will invest. And whether they invest through a Valour ETP or they invest directly through the token, it all creates demand for the underlying asset. So we all win. It's not either or. It's actually accretive if we all work together.
Yeah, it's growing the pie, growing the industry pie. I think it's super interesting. And I think that sometimes you could look across like super retail oriented mindsets and they think, if you're in a certain ecosystem and you're a big fan of a project, you almost think that like through some sort of immersion that every enterprise and institution is just like really clamoring for that. And it's just, I don't think that that's necessarily the case. I think what's happening is you have a lot of different tribal knowledge across a lot of different subsects for people that have adopted blockchain. And it's about, again, breaking those silos down to educate people on what's happening. Interesting point.
Exactly.
I think that the enterprise and institutions, as they start like having real world use cases roll out, which I think we're just starting to see, I think they're going to have to kind of tell that same story in a really like high level type way. But I don't know if we're necessarily there yet. Well, Andrew, I want to say thank you so much for joining today. It's awesome learning about Valour and how you guys are opening up access for all participants for kind of the democratization of finance here. I'm going to share my screen one more time. If you guys are interested in learning more about what Valour does, go to valour.com. You can give these guys a follow on X at Valour Funds. Give Genfinity a follow at Genfinity. You can check out all of our articles and our content here. And we're on Google News now, so our SEO is going wild. And then Hashgraph Association, huge shout out to these guys for helping us to put these together. Hashgraph.swiss